Investors today may have been a little disappointed when they saw that the first reading of real gross domestic product for the fourth quarter wasn't quite as strong as hoped. The report showed that the economy slowed at the end of last year, but a closer look also reveals something else. Steve Liesman explains.
U.S. economic growth in the fourth quarter registered a bit below economists' expectations, but the details of the report were stronger than the headline. Gross domestic product rose 2.6% at an annual rate for the 3 months ending 2017, down from 3.2% in the prior quarter. But it was the third quarter in a row of above-trend growth, and that could mean more jobs, but also higher interest rates ahead.
The jobless rate is most likely to continue to move downward because growth is moving above potential. For the bond market, this means the Federal Reserve will have to continue to raise interest rates, just as it did 3 times in 2017. It's highly likely to raise interest rates 3 times in 2018.
The GDP report showed strength in consumer and business spending, with higher oil prices propelling investment in the energy sector. Higher stock prices seem to motivate consumers to spend more of their income than they had been in the past. Taking away from growth was a sharp decline in inventories and a surge of imports. They're unlikely to continue to drag as heavily on the economy this year. While President Trump didn't get the 3% figure he's made so important, his Treasury Secretary suggested it may be too soon to look for it. That's because the effects of tax cuts and the higher deficit spending from the tax cut bill have yet to hit the economy.
I think we're going to see short-term aberrations in any quarter. I think we're very comfortable with what I've been saying is our objective is sustained 3% GDP over the long term, so we're not concerned about any one quarter which can be revised up or down. Relative to where everybody else was talking the beginning of the year at 2.1 and 2.2, I think people now expect we're getting to 3% GDP.
3% is a number that matters only politically. Economically, the important question is if the U.S. is growing at or above the economy's 2% potential. That was the case in this report and for much of last year. It's not a bad bet that above-trend growth looks set to continue this year as well. For Nightly Business Report, I'm Steve Liesman.